So a big part of my job is just trying to help guys assemble teams so that when they are on the deal, they have everyone in place. They've got very accurate numbers from tax assessment to maybe a bifurcation with like a real advice, which we've been seeing pick up, to what your insurance is going to cost with loss runs, knowing what that number is, and a PM who's pretty confident that they can manage to your pro forma.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Luke Leins oversees business development for ResProp Management, a full-service property management firm. ResProp's focus leveraging technology and strong in-market relationships to help clients scale. Luke, welcome to the show.
Sam, good afternoon. Thank you for having me.
Absolutely. Luke, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
Yeah, so I actually started in insurance when I was 20. I said I want to make $100,000 as quickly as I can, and somehow found myself in insurance. Realized I despised that after a couple of years, built out a financial brokerage. So I got more into finance. Finance brought me a little bit into the funding side of real estate. Decided I wanted to spend more time in real estate, went full time into development and acquisitions of senior living facilities. And then over the last few years, found myself in this market rate multifamily operations world.
Man, that's a lot of moving parts there. You work for ResProp. What is your role there right now?
Yes, my role is really, I oversee strategic partnerships, finding owner groups who we think we're well aligned with to grow our third-party platform. So our third-party management platform, we've owned and managed over 20,000 units through the course of 3 funds as an owner-operator. So we wanted to leverage that experience on a third-party basis. So we're in Florida, Texas, and the Carolinas, building out non-invested third-party management footprint.
Got it. No, I think that's great. I mean, that's certainly it's one of the things that it's everybody's either they love their property manager or it's their Achilles heel, right? Yep. It's like without a good property manager, if you don't have in-house property management like you guys do, it can really bring the whole ship down. How many units did you guys have before you said, "Hey, now it's time to build out a third-party property management firm"?
Yeah, we actually went from day zero. We were operating our own stuff. So when our company was founded in 2010, they started buying up bank-owned, 20, 40, 60 unit properties in Tampa, all self-managed. Wow. And in 2018, what we saw, and the thesis I think is correct, is property operations is like the most important thing that happens to your investment. And it's also the thing that gets the least acclaim. Everyone hates property managers. And your average PM makes what, $50,000, $60,000, and they are the only person whose full-time job it is to make sure that your $50 million investment goes well. Is actually really horrifying. So we were so troubled by that we decided that we would try to figure out a better way to do it.
Right. Absolutely. No, that's you're absolutely right. How do you overcome that thing you just mentioned there, where your on-site property manager is making $60,000 a year and you got a $50 million investment? What did you do to solve that issue?
Yeah, I wish we had. We haven't yet. So a lot of what we're doing is building out, and we're not the only ones doing this. We're building out the centralized corporate control. So we have a lot of our site duties and obligations are being done in our home office in Austin, Texas. So we have a team of corporate people who are making sure that collections, renewals, CRM follow-up, all these high-value activities are being done in a very timely and efficient fashion. So we built enough controls around the process that we're not just relying on that site person and a regional who stops in once a week to be accountable for everything on that site. And it's working relatively well.
I bet, because those, like you said, those are the high-value tasks that even if you have procedures and processes that get passed down to every single on-site property manager, they're all going to implement them a little bit differently.
Yep.
And like you said, having your regional stop in once a week is not enough. It's not enough to keep that person accountable and doing it the way you want it done. Centralizing that seems to make a whole lot of sense from where I stand. So that's pretty cool. What are some challenges maybe you guys have found in kind of shifting that model?
Oh man, the existing staff on our sites, when we rolled this out, we're like, hey, what does this mean for us? And it's funny. So on our owned stuff, it's going great, and we're happy to pay a few bucks a unit um, to hopefully scale back our W-2 payroll. We're seeing bad debt recovery going way up. We're seeing renewals improving. We're seeing CRM follow go up. On our third party stuff, owners see this and they say, I don't want to pay $3, $6 a unit a month. People are very P&L conscious right now. So that's been a challenge, is just the adoption. Where it works best is on 300 units when we're actually pulling out that assistant property manager role. You're saving 80 grand and then people don't care. But
Right.
when we're looking at not being able to remove any W-2 payroll, for example, on a 210 unit deal that you already had 2 people on, you can't go to a 1-person office. So you're not able to save that money. And so there's some incremental costs associated with running the centralization, which are there positive financial outcomes? For sure. Are they as clear cut as saving money on the W-2 side? Not really. So it depends on the deal size. But yeah, there's been some hesitation. But I'll tell you, in 2 years, everyone will have it.
Yeah.
It'll be very rare for a group to not have a lot of this clerical stuff being done on, in a centralized capacity.
What are you seeing on the insurance front, since you have a history in that space? So talk to me about what you're seeing in insurance, how it's affecting your clients and your properties. Give us the breakdown.
Yeah, definitely. So I live in Florida. So on September 28th, 29th, we had Hurricane Ian come through. There's a lot of groups, particularly newer sponsors and smaller sponsors, who haven't fully been able to kind of take inventory of what that did to the marketplace. So Florida's essentially frozen from an insurance standpoint. The big insurer has since put on a moratorium for new quotes, and yet we're seeing a lot of guys just going and lobbing offers in for properties. Granted, the deal volume has slowed down a lot, but guys just lobbing offers in for deals like, hey, I'm just going to underwrite insurance at, I don't know, $600, and we'll see what happens. That fallout is hitting Texas, it's hitting the Southeast, it's hitting the Carolinas. So yeah, something we've seen is just make sure you have a very strong insurance partner, a good insurance broker that you're working with, because a lot of guys it's an afterthought, right? So I deal very much in the afterthoughts. Property management is often an afterthought. Insurance is often an afterthought. And so you see these guys going just full blown at these deals, and then they're like, okay, who should I have set up an insurance policy for me? Who should I have managing the property? Where do I find a GC to do the construction? So a big part of my job is just trying to help guys assemble teams so that when they are on the deal, they have everyone in place. They've got very accurate numbers from tax assessment to maybe a bifurcation with like a real advice, which we've been seeing pick up, to what your insurance is going to cost with loss runs, knowing what that number is, and a PM who's pretty confident that they can manage to your pro forma.
I think that's absolutely awesome, and that's such a valid point. That's crazy that the largest insurers put a moratorium. Who was it I was talking to recently, and they said something like on the average, every policy written in Florida basically was a loss to most insurance companies. It's like,
Yep.
well,
Yep.
so I guess how are people finding insurance in Florida, even if the largest insurer is out of business?
Yeah, so the shorter answer is you actually can't. So what's happening is you can go to a layered and shared program. So you're taking the first $1 million of risk and you're placing it with one company, and then you're taking the 1 through 5, the next 4 million, placing it with a second, and then so all these insurers are divvying up the risk. That's coming in like on your average like 2,000, 300 unit deal. That's coming in the multiple thousands of dollars. The second thing you can do is you can work with an operator, a property manager who has a master policy that they would welcome you on. A couple issues there. They're all renewing 3-1 and 4-1. They're going to get smoked. So typically you're looking at a manager who's 100,000 units or above, and they're typically looking at 95, 2000s and newer products, something like 200 or 300 units or more. So they're not going to work with just anyone, these large carriers or these large property managers. And then option 3 is you can try to endorse your properties to existing properties that you have. So you can endorse a new property to an existing property, or try to stand up, if you have exposure in other markets, try to, as quickly as you can, stand up your own master insurance policy. So you're sharing risk from maybe Florida and Texas with maybe better risk up by you in Tennessee or in the Midwest. But the short answer is there really isn't a great solution right now. I've even talked to some groups who would put the majority of the limited equity or maybe a pref on it, and they'll actually provide insurance. So there's a lot of creative ways to figure the insurance problem out. I'll say 95% of groups who are looking in the Southeast have not figured that out. And the 10% who have figured it out are at an incredible advantage. They have an incredible advantage. So definitely something as you're looking in the Southeast to keep in mind, because it is funneling out into Texas, certainly the Carolinas, like I said. So yeah, definitely something to spend some time on.
You've mentioned quite a few advanced strategies there. What would you recommend someone do to really educate themselves on those strategies?
Yeah, I was actually gonna mention, like, there's so much value in having some insurance guys on the podcast. Our guy Matt Simmons in Tampa with USI. I don't know if he might get on, but yeah, insurance is so boring, and your average sponsor just knows nothing about it. They call their guy up, and the guy's like, "It's going to be $800." They slap $800 into the pro forma. They buy coverage when they buy the deal. Uh, it's changed a lot. It's
Right.
changed a whole lot. Even in Texas, it's changed a lot. So yeah, I would say find a good broker who does like mostly multifamily. So we use USI here in Florida. There's a group called Vertus who's based in Kansas City. Good guys. They just do multifamily. They know it front and back. There's some guys down here called Obi in Sarasota. Find someone who only does multifamily insurance and have lunch with them. Have an hour-long meeting and be like, teach me PNC insurance for my multifamily sites. And they're going to start giving you ideas, and then you can go track down those ideas, like finding a JV on a deal who has that policy.
Right.
They win because they're getting good exposure all over the place as a limited partner. You win because you're able to use that policy. So yeah, there are a lot of strategies. I would say most people don't know about them.
Sure. Sure. No, I mean, certainly I'm learning a lot here from you, and I don't deal daily in the multifamily space or even dealing with, huge insurance policies like that. But even so, learning even just some new strategies from you here today. So that's really, really cool. You talked a little bit about receiverships. That's something we talked about before we got here on the show. What did you mean when you said that? And what does that mean to what you're thinking right now as it relates to your guys' business?
Yeah. So are you not a multifamily guy? Do you do all asset types?
Yeah, I've got my hands in a lot of different things, everything from self-storage to some, co-GPs on multifamily, own a bunch of RV resorts on my own, things like that. But I don't do much in the multifamily space. So
So you're like a little in multi and like in the good way where you're not in the shit all the time.
exactly.
That's the way to
We
do
own
it.
some
That's the
really
way to
great
do it.
product or some really great projects, but I am not responsible for the day-to-day, and it's beautiful.
Yeah, self-storage is I think there's a future in self-storage forming on the side. Um, multifamily is great. Sorry, we were talking about receiverships. So
Yep.
I don't know if you know this, but interest rates have gone up pretty markedly over the
Yep.
last 6-9 months. Yeah, I think it was in the news once or twice. So anecdotally, Sam, we are seeing what's going to be a bit of a crisis. So we have insurance hitting across the country. Uh, Rates have gone up. A lot of guys bought very highly levered in the last year and a half.
Yep.
I don't want to say like irresponsibly, but very aggressively. And so there are a lot of groups who are not really able to make their mortgages. So the fact is there are going to be some bank-owned properties this year.
Mm.
Probably going to be mostly multi just because cap rates were so low and leverage was so available.
Right.
I don't know about self-storage, about retail. Probably I know some hospitality. So receiverships is so a bank takes possession of a property. That bank does not want to operate that property by themselves, so they find kind of trusted partners on the operations side to custodian or take possession operationally of that property. Maybe get it fixed up, make sure the P&L is nice and clean, the rent roll is relatively full, and then typically they'll sell it.
Sure.
So these companies already exist. There are management companies who do some receiverships. There are some who do almost exclusively receiverships. Really great relationships to have because a lot of those management companies don't invest or own themselves. So when a bank goes to an operator to manage and bring their property P&L up while bank owned, they're also looking for where do I get rid of it, right? So having that relationship, let's say you're an owner with whom that operator works, you can say, hey, when the bank is ready to sell this property, we would love to be involved, start lobbing LOIs through this mutual connection you have. I think that's going to be a strategy that for those who are willing to put the legwork in is going to be really advantageous.
Yeah, no, I think you're absolutely right. Let's talk a little bit more about that. Cause I mean, one of the things that we chat about was utilizing, our relationships to find owners and deals. So is that one of the strategies that maybe would come to mind for you?
Yeah, for sure. For sure. And I honestly, so we're seeing a lot of guys, hey, I want to make deals, I want to win deals, I want to find deals. There aren't very many, particularly multifamily, very many deals in the market. But we still have quite a bit of capital out there. Balance sheets are still good enough that there's a lot of people hunting. Now, my average call with a new group is like, hey, do you own anything? Will you sell it to me? And I'm like, I don't know, I don't really know you, probably not. What I do as a vendor, as a property manager, is every interaction I go into, Sam, with an ownership group, is I want to provide them some value. I want to provide them some level of insight. I want to dedicate some time to helping them fix their problems. Owners don't do that with their vendors, with their partners, with their PMs. Um, if an owner would return that to, we just had a group who they were talking to their GC, and their GC was telling about some deals that they knew were not doing well,
Mm,
and they were able to go get in touch. If you treat your PMs well and try to really have it be a mutual relationship where you say, hey, I'd love to work with you. Let's trade some information back and forth. There's so much going on in multifamily and in real estate in general right now. The more people you have on the ground, namely that PM and construction groups, you're gonna find deals who aren't paying their bills, they're not able to, and then you can go in and start lobbing in offers. I think that's going to be an absolutely huge opportunity this year, along with receiverships, is just getting ahead of that bank owned and finding those guys who are forced to sell, getting in there relatively quickly. And the place you're going to find that is like pest control companies, landscaping companies, construction companies, PMs. They're going to start talking about how this property hasn't been paying their bills. That's a pretty
mm,
good indication that they're struggling.
right.
And that's a good time to make a phone call.
Right. No, absolutely. Absolutely. Yeah. It's it's just boots on the ground. I mean, it takes a lot of work, doing the method you're describing, but yet I'm sure that's where the lowest hanging fruit really is to be found. What, other than, insurance costs going, which we even talked about this last year extensively, that insurance had a very hardening of the market last year. So not only do we have a hardening of the market where rates were going up, but now you can't even get insurance. You got that storm, you've got the interest rate storm going on. What are some other kind of pains you're seeing in the marketplace, and then how are people overcoming those and/or finding opportunity inside of that?
Oh man, obviously deal volume is down, deal flow is down, and so I mean everything I talked about uh, in the last 10 minutes has really been finding your own deal flow, right?
Mhm.
Not bugging the brokers, but going out and finding your own groups. There are, even if you don't have CoStar or something yourself, you can find a PM partner or someone who does have CoStar, and you can actually export in the markets you're interested in, what sort of loan they're on, when their loan is maturing. That's a big one, is trying to create your own deal flow by reaching out to those groups. Um, Gosh, yeah, there's a lot. I would say those are the two big ones, with mortgages and insurance. Staffing has been a huge issue. I think that's settling down a little bit. People are getting used to kind of paying a little more, and their unemployment has gone up just enough that it's not impossible to find good people on your site anymore.
Right.
So that's largely been addressed. Like I said, we're kind of addressing it on the tech side a little bit, but I mean, it's going to be an interesting year. There are going to be more challenges this year that come up. So
Right.
whoever's willing to figure it out and find their own solutions is going to do very well.
Absolutely. Absolutely. I mean, I was talking to somebody the other day, and it was they acquired. It was back when the stupid loans were being written, like, 3% interest rate for 30 years. I mean, non-recourse. And, they started picking up these assets. They even just closed one a couple of weeks ago. And I'm like, I mean, that's gold. That's gold
Yeah,
right now.
yeah,
Like, my gosh. I mean, that's, if you're talking about mortgage and loan, loan characteristics, those are the ones I'd be looking for if I were in multifamily. Like, find those ones that are assumed that. Then that was the other beautiful thing of it. They assumed it, and then they can still yet sell it again and let the next person assume it. It's like, this is, my gosh, like there's so much value in that right there. But I digress. I've got one last question for you here. I know we're almost out of time. How are you guys leveraging tech and innovation both inside of your company and maybe what you're seeing others use in their businesses?
yeah. So something we've been working a lot on. So backing up, vertically integrated owner operator. We wanted to do two things. We wanted to stand up a third party non-owned management company, and we wanted to launch some technology companies that directly impacted um, property operations, the P&L. I would say the most interesting thing we've been doing is on your site, you've got your W, so you got 200, 300 units. That's either 2 or 3 full-time people on the maintenance side on that property. what we've been trying to do is anything outside of scope from a work order standpoint for that group, then you're going to a GC or a local group that costs quite a bit of money. So what we've been trying to do is empower sole proprietors to start their own businesses so that they can make more money on multifamily sites on a contract basis, and the property is doing better financially. So we've been launching companies that can provide insurance for vendors, that can provide payment terms for vendors, that can help those vendors get set up. And then, for example, our system Get Done, if you have a unit turn, you can actually punch in the unit that you want turned, and it'll actually route the resurface, the trash out, the flooring, the paint. It'll actually route it out to vendors, preferably sole proprietors we've been able to set up, and they're able to competitively bid on and execute that work. So it enables you, same thing, right? We talked about the centralized services on the W-2 side in the office. On the maintenance side, it would be great to pull back, have two really good people that you're maximizing, and then have a very good pool of people who are self-employed who are able to come in and sub in for the things that your W-2 teams can't handle. It's working really well today, and it's providing a lot of opportunity for groups or for people who might have been on site forever. You're kind of maxing out at $40,000, $50,000, $60,000 a year. We've got guys who are getting insured and standing up through these systems who are now making like 90 or 100 grand a year because they're their own boss. They're working, they're making good money on this, and the properties are doing well because they're not having to pay that GC premium when they're doing a unit turn or a light renovation.
Absolutely.
So that's been a big piece of it for us.
That's really cool. And I won't rehash all the things that you just, mentioned, the benefits of that, but certainly on the construction side, I mean, something even on a project that we just acquired here in Memphis a couple of weeks ago. I was down there meeting with some of those, kind of smaller contractors, and I'm like, gosh, man, like I need to get out of this position. This is not a great use of my time. But yet, when I look at it from a cost perspective, I'm like, I can't hire a GC to do this project. My gosh, I'd spend an extra, whatever it was, $10,000 on a $30,000 project just to bring somebody else in and run it, when it's like, okay, this is the time is worth it. But yet at the same time, finding a way to do that at scale is absolutely awesome. So I love what you're doing there, Luke. Thank you for taking the time, certainly, to come on the show today. Learned a ton from you. I do appreciate it. If our listeners want to get in touch with you and or the property management company, what is the best way to do that?
Yeah, I'm on LinkedIn. Luke, Luke, Leins, Leins. My email is LLEINS at ResProp, ResProp management.com.
Perfect. We'll make sure we include that there in the show notes. Luke, thank you again. Certainly appreciate your time.
Hey, Sam, thank you very much. Good talk.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.